Good day, YouTube. This is J Money with Fallingport Financial. Just a article here I thought was kind of interesting about Aurora and Canopy growth. Has Aurora become a better buy than Canopy growth? That is the question. We'll go over it and follow the information. I've made videos about both of these. My preference is Canopy over Aurora, but kind of a bad one to ask. The Aurora videos that I've done, I'm way in the red. I think my cost basis is 50 something. It's because of a reverse split, so I'm not looking too good with Aurora, but Aurora and Canopy Growth are top of the two MJ companies in Canada, but both businesses have struggled in recent years in growing their operations and staying out of the red. In their most recent quarterly results, the two companies appeared to be moving in different directions. Aurora has been making significant progress in strengthening its bottom line, while Canopy Growth remains nowhere near break-even. And the thing about Canopy Growth, they have Constellation brands backing them. I think Aurora has Molson Coors. Maybe I'm thinking of Hexo, but I don't think that goes over that information here in the article, but we'll wait and see. Aurora looks to be on track to post a profit soon. Aurora used to be my favorite MJ play, and then it switched to a Freya, which is now Tilray. So now I would say my favorite MJ play is by far High Tide, so with what all they have going on. So you can find those videos in the description as well. So last month, Aurora reported its quarterly results through the end of December. The prevailing trend for the business is that it is getting leaner and cutting more costs in an effort to post a profit. In the second quarter numbers, the company's adjusted earnings before interest, tax, depreciation, and amortization, or EBITDA, loss was 9 million Canadian dollars. That is the modest improvement from the 11.5 million loss it reported a period earlier. Company reaffirmed that it would be profitable by the first half of fiscal 2023. That means by the time next year, Aurora should be in the black. So put that on your calendar. So hopefully many more will follow. So one of the reasons Aurora is hopeful about improving its prospects for profitability is that it is focusing more on its medical MJ business, which enjoys higher margins than the recreational side. Of the $60.6 million in revenue it recorded in Q2, $45.7 million, or 75% of that, was from medical MJ. A year ago, it was 57%. Canopy Growth looks to be much further away. Its third quarter results, which ended on December 31st, Canopy's growth adjusted EBITDA loss of $67.4 million was only a $1 million improvement from a year ago, while the company noted that it reduced selling, general, and administrative expenses. Declining sales numbers and worsening gross margins offset many of those improvements. On its earnings call, the economy said it had plans to focus on achieving profitability in Canada, while is continuing to work on developing an ecosystem in the United States market. However, the company stopped short of offering any firm date to when break-even might happen. So we'll just have to wait and see on this one. I think since this one is down so far, I think one of my accounts, I have a cost basis of $38 on Canopy Growth, and last I knew it was in the $7 to $10 range, so I'm way in the red on this one also. So despite what management may say is happening, the numbers don't lie. The company's gross margin was a pitiful 7% in Q3, and even on an adjusted basis, it was only 13%. This past quarter, its gross margin was $10 million, was less than half of $24.6 million. Canopy Growth reported a year ago. Until it can improve that significantly, it'll be hard to see a clear path toward profitability for the business. Is Aurora really the better buy? The stock might be a cheaper price, but as a whole, I would put my money in Canopy Growth. So just because they have Constellation Brands backing them, so its business shows signs of improvement, even though revenue has been far from impressive over the past 4 quarters. It has been within a fairly narrow range between 55 million and 61 million Canadian. Canopy Growth is nowhere near profitability, and its top line has also been lackluster. Last quarter net revenue of 141 million was down 8% year over year, while the business is positioning itself for an eventful move into a United States recreational pot market. It could be years before it opens up, as legalization does not appear to be imminent. Aurora does look like the better business today, although Canopy Growth may be better in the long run, but ultimately MJ investors will likely be focused on growth opportunities. Unfortunately, neither stock offers much of that today, which is why both have plummeted more than 60% in the last year. However, the MJ sector as a whole hasn't fared well, with Horizon's MJ Life Sciences ETF also down by a similar percentage, as investors have grown tired of waiting for progress on legalization front in the United States. So this is what it's all about here, and you might want to check out my last couple videos. I did one, why Biden is accepting MJ donations but not pushing MJ to legalization. Another one, Biden administration advises applicants not to invest into MJ, I just did today as well. And there's a couple other ones in regards to legalization you can find in the library as well. So they might piss you off watching them. They did me making the video just because it's just been back and forth. February 10th of last year, they were all for it, or prior to that, and then I think on that date was announced by Schumer that it would not be legalized while Biden is in office. And then on February 10th of this year, Schumer came out with another ad saying that it was going to be legalized, or being pushed that way. So it's just back and forth. So never know what's going to happen one day to the next with them. So unless you're willing to be incredibly patient and are okay with seeing significant losses in your portfolio, you may be better off avoiding these companies for now. A better move may be to go with a much safer growth stock instead, or else you can, if you're still looking to stay in MJ, there is the MJ ETFs. I've went over numerous times, and I have quite a few of them. One is MJ is the ticker. Another one is MSOS. Another one I believe is THCX. Another one is Yellow, and there's a couple other ones out there that I have that I would just have to look up at this point in time. But and if there's any other MJ stocks out there you want me to take a look at, I would be happy to take a look at those and put a video together as well. I've done a lot of penny stock MJ videos. I did one earlier, movers and shakers. There's some interesting penny stocks in there. And then today I did the top 11 MJ stocks list for 2022. So lots of penny stocks in there as well. So, but that is it for this one. You can put in the comments whether you like Aurora or Canopy Growth, or if you don't like either and like something else, like me, like High Tide. So you can put that in the comments as well. So, and I thank you for all the new subscribers, and just keep growing the channel and putting out videos and getting the word out about everything. So today's obviously been MJ Friday, so it's the weekend's here, so time to party, so you can look at it that way. But that is it for this article, and if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing and hit the bell so you're notified of when the next videos drop. Again, this is Jay Money, Falling Forward Financial. Happy trading, happy investing, stay green. Cheers.